Hi, welcome to Market Insights with Voight Real Estate Services. My name's Eric Northbrook. I'm the Executive Director here for Voight Real Estate Services. And I'm glad to have Randy LaChance here today, Capital Market Specialist. Welcome, Randy.
Thanks, Eric. Glad to be here.
We've been through a lot in the last couple of years. Investment real estate is some have been on fire, some not so. Give us what are you seeing out there?
Well, yeah, the market took fire in the summer of 2020 after the couple month pause of the original pandemic when it hit, and driven by low interest rates, right? The federal government was printing money, handing out money, and the low interest rates really drove the market. And I think just logically, industrial, multifamily did really well. There was still a lot of capital chasing office and flex properties and even retail properties because of a higher yield, but it wasn't as hot as the industrial multifamily.
Give us, you had a fantastic year last year selling over, $250 million worth of real estate. Give us a couple of examples, quick examples.
Well, I mean, just sold a single tenant deal up in Anaheim, multiple offers. The buyer who ended up buying it with non-refundable day one. It was a single tenant, rent was below market, but it was at the end of the day closed at a 3.45 cap rate and $400 a foot, which was probably 25% over the most recent sale in the area.
And then how about an office? You did a couple office deals. What are these buyers saying to you?
Yeah, so I sold a really high quality office building up in Rancho Bernardo, $33 million deal, 95% leased. It had maintained its occupancy during the pandemic, which was a thing a lot of people were looking for. But really, it's all about chasing yields. That deal traded in the high 6% cap rate versus an industrial deal at a 3.45
And what
cap.
price per pound was that?
That was over $300 a foot, which was a good price per pound because we were able to hold our rents.
And then, they're talking about 4 or 5 quarter bumps in interest rates. How's that going to affect cap rates just going forward?
Well, it's interesting. Cap rates are really a rudimentary approach to valuing real estate. It basically takes the current NOI and divides it by value, right? And it doesn't take into account lease terms, how the rent rates are relative to market, and what rent growth there is. And so I believe that in the good quality product, especially industrial, you're going to see rent growth offset the interest rate hike. And so I think you'll still see same prices per pound, but cap rates may go up.
Well, I thank you for
Sure.
your time.
Glad to be here.
Thank you for your time today.
Thank you.